Hello everyone. Welcome to our comprehensive fundamental analysis of TCS, Tata Consultancy Services Ltd. I'm here to take you through a detailed investment perspective on India's largest IT service company and one of the most valuable stocks on the Indian market. Today, we will explore TCS business model, financial performance, growth strategies, and investment potential as we progress in FY26. Whether you are a seasoned investor or someone looking to understand this IT giant, this analysis will provide you with the insights you need to make informed investment decisions. Before we start, let me put the disclaimer that this analysis is for education purpose only and should not be considered as personalized investment advice. Always consult with your financial advisor and conduct your own research before making investment decision. Let's dive in. Our analysis today is structured across 8 key areas that every investor should understand about TCS. First, we will start with the company overview to understand TCS at a glance, their scale, global presence, and what makes them unique in the IT services landscape. Next, we will examine their business model and core service offerings, including their strategic pivot towards AI and digital transformation. Then we will deep dive into the financial performance, looking at revenue growth, profitability metrics, and recent quarterly results. We will analyze their business segments and geographic distribution to understand the revenue drivers and market position. Following that, we will explore their competitive advantage and growth opportunities, particularly in AI and emerging technologies. We will also discuss the key risk factors, challenges facing the company. Finally, we will conclude with our investment thesis based on our analysis. This comprehensive approach will give you a 360-degree view of TCS as an investment opportunity. Let's start with TCS at a glance. Founded in 1968 as part of the prestigious Tata Group, TCS has grown from a small Indian software company to become the world's second largest IT services company by market capitalization. With a current market cap of approximately 11.34 lakh crore rupees, TCS is not just India's most valuable IT company, but one of the most valuable companies across all sectors in India. The scale of TCS is truly impressive. They employ over 6 lakh people from 150 different nationalities, making them one of the largest private sector employees globally. This massive workforce is spread across 46 countries, giving TCS a truly global footprint. In FY25, TCS achieved a significant milestone by grossing $30 billion in annual revenue. That's approximately 2.5 lakh crore rupees. This represents a 7.6% year-on-year growth despite challenging global macroeconomic conditions. What sets TCS apart is their commitment to innovation. They have over 8,800 patent applications with more than 4,800 patents already granted. This intellectual property portfolio demonstrates their focus on cutting-edge solutions. The company also maintains a strong governance standard with over 35% women employees, well above industry averages, and has maintained a relatively low attrition rate of 13.3%, which is impressive in today's competitive talent market. TCS operates on a comprehensive business model that spans the entire spectrum of IT services and digital transformation. Let me break down their core offerings. The largest segment is IT services and consulting, which includes application development, maintenance, infrastructure services, and digital transformation consulting. This forms the backbone of their business. They have they are also heavily invested in AI and automation services. TCS has developed over 150 specialized AI agents and their Wisdom Next platform, which serves as a Gen AI aggregation platform, allowing clients to experiment with various large language models. Their engineering and R&D services cater to product companies across industries like automotive, aerospace, and telecommunications, helping them with product development and innovation. Business process services handle back office operations for clients, leveraging automation and AI to improve efficiency. TCS also has a growing products and platform division, including their own software solutions like TCS Crystallis for SAP implementations. What particularly exciting is their strategic partnership. They have formal they have formal AI partnership with Microsoft, Google Cloud, AWS, and Nvidia. These partnerships position TCS at the forefront of AI-led business transformation. Their business model is designed around long-term client relationship rather than one-off projects. This approach has resulted in strong client retention and predictable revenue streams. Over a third of their client engagement now use AI or Gen AI for accelerated project outcomes. Now let's examine TCS financial performance, starting with their impressive revenue growth trajectory. Looking at our revenue chart, you can see TCS journey from 22.17 billion dollar in FY21 to crossing the 30 billion milestone in FY25. This represents a compounded annual growth rate of over 7% during a period that included significant global economic challenges. FY22 saw exceptional growth of 16%, driven by accelerated digital transformation during the pandemic. FY23 maintained solid momentum with 8.6% growth, though FY24 saw a pause in growth due to macroeconomic uncertainties affecting client spending. However, FY25 marked a strong recovery with 7.6% growth, taking them past the symbolic $30 billion mark. This achievement is particularly noteworthy because it came despite continued global economic headwinds and cautious client spending in discretionary technology areas. Breaking down the recent Q1 FY26 performance, TCS reported revenue of more than 63,000 crore rupees, which is a 1.3% year-on-year increase in INR terms. However, in constant currency terms, revenue declined by 3.1%, reflecting the challenging demanding environment. What's encouraging is that despite modest revenue growth, profitability has remained strong. Net profit in Q1 FY26 was 12,760 crore rupees, up 6% year-on-year, demonstrating TCS ability to maintain margins through operational efficiency and cost optimization. The company's total contract value or order book stood at $9.4 billion in Q1 FY26, representing 13.2 year-on-year growth, which provides confidence about future revenue conversion. Financial metrics comparison. Let's examine the key financial metrics comparing FY24 to FY25 performance to understand TCS financial health and trajectory. Starting with revenue, TCS grew from $27.93 billion in FY24 to $30.05 billion in FY25, representing solid 7.6% growth despite challenging market conditions. This growth demonstrates TCS market leading position and client retention capabilities. Net income increased from 5.62 billion to $5.779 billion, a 3% growth that, while modest, shows disciplined cost management. Slightly slower profit growth compared to revenue indicates some margin pressure, which is typical during economic uncertainties. Operating margins improved from 37.9% in FY24 to 38.6% in FY25, a 70 basis point improvement. This margin expansion is impressive and reflects TCS operational efficiency, automation benefits, and improved service mix towards higher value offerings. EPS or earnings per share grew from $1.54 to 1.59, representing consistent shareholder value creation. This steady EPS growth, combined with regular dividends makes TCS attractive for income-focused investors. What is particularly noteworthy is TCS balance sheet strength. The company is virtually debt-free and generates strong cash flows. In Q1 FY26, cash flow from operations was 100.3% of net profit, demonstrating excellent cash conversion. The company declared an interim dividend of 11 rupees per share for FY26, continuing their consistent dividend payment track record. This reliable dividend policy, combined with potential for special dividends, provides additional returns to shareholders. These metrics position TCS as a financially robust company capable of weathering economic cycles while rewarding shareholders. Let's analyze TCS business segments to understand their revenue diversification and growth drivers. Looking at our pie chart, BFSI or Banking, Financial Services and Insurance remains TCS largest vertical, contributing 31.3% of total revenue in Q4 FY25. This represents a slight growth of 2.5% year on year, showcasing resilience in financial services spending despite economic uncertainties. Consumer business is the second largest segment at 15.7% of revenue, though it saw a marginal decline of 0.2% year on year, reflecting subdued consumer spending patterns. Life sciences and healthcare contribute 10.9% but experienced a 5% decline, primarily due to delayed healthcare IT investments and regulatory challenges in the pharmaceutical sector. Manufacturing represents 8.8% with 2.9% decline as industrial companies have been cautious about discretionary technology spending. Technologies and services at 8.2% showed positive momentum with 1.1% growth driven by software companies' continued investment in modernization. Communication and media faced headwinds with 9.8% decline as telecom and media companies optimize costs amid competitive pressures. Interestingly, regional markets and others showed the stronger growth at 25 to 22.5%, though from a smaller base of 12.9% revenue share. This growth is driven by expansion in emerging markets and new service offerings. The good news is that TCS management expects retail and manufacturing to recover in FY26, following the banking sector's recovery pattern. AI and digital transformation projects are driving new opportunities across all verticals. Let's see regional revenue breakdown. TCS geographic revenue distribution reveals both their global reach and certain concentration risks that investors should understand. North America dominates with 50% of total revenue, though this represents a slight 1.9% decline year on year. This concentration in North America provides stability but also exposes TCS to US economic cycles and policy changes. The UK contributes 16.8% of revenue with 1.2% growth, showing resilience despite economic challenges. Continental Europe adds 14.6% with 1.4% growth, indicating steady European market performance. Asia Pacific at 7.8% showed solid 6.4% growth, reflecting TCS successful expansion in markets like Australia, Japan, and Southeast Asia. Standard performer is India at 6.7% of revenue, which grew by an impressive 33% year on year. This growth is driven by government digitization initiatives, including projects like the BSNL 4G rollout and increased domestic corporate spending on digital transformation. Latin America and Middle East and Africa remain smaller markets at 2% and 2.1% respectively, but both showed healthy growth, indicating potential for future expansion. While the North American concentration provides scale and stability, TCS is actively working to diversify its geographic revenue base. The strong growth in India and Asia Pacific market is particularly encouraging as these regions offer significant long-term growth potential. Competitive position and market leadership. TCS' competitive position in the global IT service market is built on several sustainable advantages, with AI leadership becoming increasingly important. TCS is the world's second most valuable IT services company by market capitalization and India's largest by revenue. The scale advantage is significant. With over 6 lakh employees, they can handle massive transformation projects that smaller competitors cannot. Their brand heritage as part of the Tata Group provides unmatched trust and credibility with clients worldwide. This Tata brand value opens doors and creates confidence in boardrooms globally. In AI and Gen AI, TCS has established clear leadership. They have developed over 150 to 150 specialized AI agents across various business functions and industries. Their Wisdom Next platform allows clients to experiment with multiple AI models from different providers through a single interface. TCS has forged strategic partnership with all major cloud and AI providers, Microsoft, Google Cloud, AWS, and NVIDIA. These partnerships position them uniquely to offer clients best-in-class solutions regardless of their technology preferences. Their approach to AI is particularly sophisticated. Rather than just implementing AI tools, TCS has developed what they call agentic AI, autonomous systems that can perform complex business tasks. Over 180 AI-led projects were active in Q4 FY25 alone. Real-world examples include a Gen AI-based drug design platform that reduced pharmaceutical research time from 12 months to 8 weeks, and AI systems for airlines that enable natural language queries of complex data. ESG or environmental, social, and governance factors are increasingly important for institutional investors, and TCS scores well across all ESG parameters. On the environmental front, TCS has committed to achieve net zero emissions by 2030, well ahead of many of the peers. They have reduced their carbon intensity significantly and are helping clients implement sustainable business practices through their digital ESG solution. Their social impact is substantial with 35.2% women employees. TCS leads the industry in gender diversity. They operate extensive skill development programs and have trained millions of students through their academic partnerships. Their focus on diversity extends beyond gender. With 152 nationalities represented, TCS demonstrates true global inclusion. This diversity of thought and experience enhance their problem-solving capabilities and cultural understanding across different markets. From a governance perspective, being part of the Tata Group means adhering to the highest ethical standards. Tata Code of Conduct and transparent reporting practices provide investors with confidence in management integrity. TCS also helps clients achieve their own ESG goals through technology solutions, creating a virtuous cycle where good ESG practices drive business growth. TCS was recognized as the ESG Initiative of the Year for Corporates in 2023, highlighting their leadership in sustainable business practices. While TCS has many strengths, investors should be aware of several risk factors that could impact future performance. The most significant risk is over-dependence on the BFSI sector, which contributes 31.3% of the revenue. Any major downturn in financial service could significantly impact these TCS growth. However, this concentration also reflects the deep expertise and strong relationship in this high value sector. Geographic concentration in North America at 50% of revenue creates exposure to US economic cycles, immigration policies affecting H-1B visas, and potential trade tensions. Any restrictions on skilled worker visas could increase delivery costs. Currency fluctuations can significantly impact margins since TCS earn primarily in foreign currencies but a substantial cost in Indian rupees. A strong rupee can compress margins while a weak rupee benefits profitability. Talent retention and cost inflation remain ongoing challenges. While TCS 13.3% attrition is low by industry standards, the war of AI and digital talent is intensifying, potentially driving up compensation costs. The rise of global capability centers, the in-house IT teams that multinational companies are building in India, there represents competitive pressure. Companies like JP Morgan, Amazon, and Google are expanding their Indian operations, potentially reducing outsourcing demand. There are some more. Technology disruption is a double-edged sword. While AI creates new opportunities, it also could also automate many traditional IT services, potentially reducing demand for human resources in certain areas. Increasing competition from cloud native service providers and consulting firms that specialize in specific technologies could pressure TCS market share in emerging areas. Finally, client concentration in specific sectors create risk if any major client reduces spending or terminates relationship. Now, based on our comprehensive analysis, here is our investment thesis for TCS. TCS represents a high quality, large cap investment opportunity with several compelling attributes. The company has demonstrated consistent financial performance, strong competitive positioning, and is well positioned for the next wave of technology growth. Strengths that supports a positive investment case. TCS has established clear leadership in AI and digital transformation services. Their early investment in AI capabilities, strategic partnership, and practical implementation experience gave them a significant competitive advantage in this high growth market. Then the financial metrics are excellent. Strong margins, consistent cash generation, virtually debt-free balance sheet, and regular dividend payments make TCS attractive for both growth and income investors. Also, the Tata Group brand, global delivery capabilities, and ability to handle large-scale transformations are difficult for competitors to replicate. Growth catalysts for TCS include AI and digital transformation acceleration, government digitization initiatives, and 4.0 adoption, among others. Now, coming to the most important valuation aspects. The current valuation appears reasonable. Trading at a PE ratio of around 23, TCS is valued at a premium to some peers, but the premium is justified by superior margins, growth prospects, and market leadership. The dividend yield of approximately 4% provides steady income while waiting for capital appreciation. TCS has a track record of increasing dividends over time and occasionally declaring special dividends. Analyst sentiment remained largely positive with target prices ranging from 2939 to 4500, indicating significant potential upside from current levels. The wide range reflects different views on the speed of market recovery and AI adoption. The current correction has created an attractive entry point for long-term investors. While short-term volatility may continue due to macroeconomic uncertainties, TCS' strong fundamentals and AI leadership position suggest good potential for wealth creation over 3.5-year investment horizon. And as a conclusion, we will call TCS a strong fundamental growth story and is suitable for investors seeking exposure to India's IT sector growth, those looking for quality large cap stock with steady dividend income, and investors who believe in the long term potential of AI and digital transformation markets. Thank you for joining me for this comprehensive analysis of TCS. I hope this deep dive has provided the valuable insights into one of the India's most important companies and given you the information needed for your investment decision. If you found this analysis useful, please like this video and subscribe to our channel for more detailed stock analysis and market insights. And the comment section below, feel free to ask the questions, share your thoughts. I have listed some pointers here for your help or mention topics you would like us to cover. Once again, remember that this analysis is for education purpose only and should not be considered as personalized investment advice. Always consult with your financial advisor and conduct your own research before making investment decisions. Until next time, happy investing. Thank you.